Okay, good morning, everyone. Charles Park Broker Manager Max West. I'm joined here by Ron Gibson and his colleague Michael Clark from Gibson Mortgages. As of yesterday, all the new mortgage rules that we've all anticipating came into effect. Am I correct?
Yes, yes.
So we're just here casually talking about the vast majority of the changes that we can come to expect as real estate agents working with our mortgage partners in order to try to get our clients qualified to buy real estate. So the biggest change, as we were just talking casually just before we started recording this, Ron, I'm gonna leave it to you. Actually, maybe you can sort of give me a lead up to where we were to where we are right now, and then we can have the agents kind of wade in with their questions afterwards. How's that?
Absolutely, that sounds great. And first of all, I just wanted to introduce ourselves to everyone. So my name is Ron Gibson from Gibson Mortgages, and we're going to be partnering with you guys at your Brooklyn and Scarborough offices. Michael Clark will be full-time in the Scarborough office, and Amy will be full-time in the Brooklyn office. Okay, so if you guys have any questions or any concerns or any mortgage issues, you can give us a call. I just want to touch base about how these new rules are going to affect your buyers. Okay, so probably they basically take effect today, and the main thing is all of those buyers who in the past were looking at a $1 million, anything up to $1 million, you were able to put minimum down payment down, and at $1 million there was always that that problem, where they needed, all of a sudden they needed 20% down. So if they insure the mortgage, they can go up to $1.5 million as of today with minimal down payment. So I'm going to give you an example. Prior to today, for let's not use the whole 1.5. Let's use an example of a $1.2 million purchase. They would have needed a $240,000 down payment plus closing costs. And that was very restrictive to most first-time buyers. As I'm sure you all know, that you've been around that $1 million mark where you probably had a lot of purchases at 9999999, because as soon as they hit $1 million, they needed 200 grand. So, it's okay for people that are selling and buying because they usually have a little bit bigger down payment. But for first-time buyers, they didn't have that. So as of today, that $1.2 million purchase, they can put, so basically $95,000 is the down payment required for a $1.2 million purchase versus $240,000. So that's as of today, and they can qualify at a 30-year amortization, no longer at 25, which will allow them to qualify for a little bit more home. Okay, Michael, do you have anything to add to this?
No, I think, well, a lot of people do think of it as just the first-time home buyers, but I think you also have to think about move-up buyers. People who may be sitting in condos right now have a little bit of equity, may not qualify for 20% down, but now will qualify based on the new rules.
We should probably just refer to it as 10% down because it works out to almost 10% down, but it's actually a little bit less. But yeah, Michael's right. And there is everyone needs to you really have to have a good relationship with a mortgage person in this new market, because there are some little asterisks in the definition of first-time buyer. So I'll give you an example. The definition of first-time buyer, for sake of the extended amortization and purchase price up to 1.5 million, is as follows. They have to have not owned a home in the last 4 years, or gone through a divorce, or don't own a home at all, or the last one is they can add another person on the title that's a first-time buyer. As long as one first-time buyer on title, they could qualify under the new rules. So I'll give you an example. I've got maybe 3 deals that are that I have to submit today that were purchased last month, where clients they waived the financing already, and these people all sold a house and then bought. So they sold a townhouse for let's say 700. They pulled out some money, and then they basically are buying at for 1.4 million. And what they did is they added their children on the deal. They added one person, and now they qualify because that person is now a first-time buyer. So as long as you add one buyer on the deal, that's a first time buyer, they will qualify. Okay. So it's an opportunity for everyone to get their forever home now. Okay.
Is there a time restriction as to how long that person has to be on title?
I don't think so. You know, I spoke to a lawyer about this on the weekend, and basically, you know, this is going to be one of those, you know, unfortunately, I guess, one of those pinky swear things is because they're not going to, you're going to be basically be signing a stat declaration with the lawyer, just swearing that you qualify as a first time buyer for this, for sake of this program. So there's different, depending what you're speaking about, there's different definitions of first time buyer. Like for land transfer tax rebate, if you ever owned a home, you're not you don't get a rebate anymore. Okay, for sake of this new program, it's the ones I just alluded to. For the RSP withdrawals, it's different. It's in the last like 5 years, and you got 15 years to repay it back, right? So, hope that answers the question.
Yeah, I just I'm looking at obviously we know that love money is the predominant source of a lot of down payments, especially in recent years.
Yep.
If that love money requires, I actually maybe you can weigh in on this. Like a lot of the times, these first-time home buyers don't even qualify for the mortgage, so you know they kind of need the parents to buy it for them anyways.
Yes. So if the parents are going on the deal, right? As long as the kids are going on, then they qualify as first-time buyers. Okay?
Wow.
As long as one person is a first-time buyer, they can qualify. They can go right up to. So if the parents want to buy another house up to 1.5 million, and you know put minimum down payment down, even if it's a second home, if they add a child on, we're good to go.
Wow. That's an
Yeah.
interesting angle that I think
Yes.
that we could use in order to get because you're qualifying for a much better monthly payment, correct?
Yes, you are. I mean, the point of this program, let's be honest, is not to this isn't a situation, especially when you're going up to the higher values. You know, the idea is for these people to live in these houses for a longer period of time, because the insurance premium is, they have to pay that, right? And it's 4%. So, or approximately 4%. So, you know, where you bought an $800,000 home before and you put, or let's just say 500,000, you put 5% down, the premium was 4%. So it was like 20 grand plus HST, right? So now if if you buy at 1.4 million, you pay a premium, it's like $50,000.
So has the CMHC issued a new chart on the insurance premiums as a result of these changes?
I'm not sure. We've been asking for direction from CMHC for months, and they haven't given us any. Only Friday did we get direction from some lenders. Literally
And those are the
Friday.
actual are they A lenders that have been getting
Yes.
back to you, or
Yes.
so it's the
Yes.
banks?
Yes. Yeah.
So do the banks have access to information that we don't have it at the street level? Like,
I think they were waiting for each other to change. Like they don't even know. There's another program that also happened, like for mortgage switches, that happened recently in November as well, where they got rid of the stress test for people transferring mortgages, and that was a bit of a conundrum because only certain banks were allowing it, and it depended what lenders you were with, so they don't even really have direction there. So to answer your question, um, not really. Like banks were kind of waiting on each other to see what their process would be. So we got one. First National was the first one that gave us some direction, and then MCAP and was on Friday, and we haven't. Those are the only two lenders we've received direction from so far.
so let's stay on that topic for just a little bit. So
Yeah.
people who aren't first-time home buyers now, that are renewing their mortgages,
Yes.
so you're telling me that this program also benefits them to a certain extent?
Well, it's just these are all of the changes that were recently announced. So there was the extended amortizing. So the first stage of this was in August, when I don't know if you remember this, where they were offering a 30-year amortization to insured mortgages on pre-construction homes only. That was August 1st. That was like a benefit to almost nobody. Okay.
Yeah, true.
All right. Let's be honest. So
Yeah.
they've rolled that out to all first-time buyers for all homes, and they've extended to 1.5 million. Okay, the insurable mortgage amount, And then they also removed the stress test from mortgage transfers upon maturity, which, to be honest, affects almost no one as well, because most people that don't want money out of their mortgage when their mortgage matures, they just want to renew or switch it. Most of them qualify anyways. So as soon as you take any extra money out, it's now a refinance, and that then they apply the stress test on that. So, and then there was
what pops into my head is I've got somebody who's renewing his mortgage in 2025.
yeah,
And they're, obviously they when they got this mortgage 3-4 years ago, it was at a dirt cheap rate.
yeah,
They love the mortgage payment that they are paying right now. How do they even come close to that mortgage payment on the renewal?
they won't. They won't. But you know what? Like, it's gonna be, they're gonna be in the 4.5% range. They're probably at around 2, and they're gonna go to about 4.5. But the qualifying doesn't really matter because they qualified at 525 anyways at that time. So if they qualified at 525 5 years ago, they're probably making more money now anyways, and their mortgage is also lower, and they'll have to qualify at 6.5 now instead of 520, unless, so it doesn't really matter. That's my
If I
opinion.
can just jump in, Charles, to your point, you may want to also look at, for those clients, if they're not risk adverse, they could look at variable. Because again, we are still looking at rates coming down up until next summer.
100%.
That variable rate is still so high.
Yes.
It's almost unfathomable to try to think that you can pay a variable rate at that interest rate for even say 6 months, in the anticipation that we're going to start seeing, like we just went through a 0.5 point, rate reduction just recently. So that's 1% in the last 2 cycles.
Yeah.
Is that going to happen again? I just don't see that foreseeable, right?
I think rates are going to come down another 1% next year. So
wow, that's optimistic.
Yeah, I think so. Yeah.
But I thought the announcement that Tim Macklin said that if there's any additional rate cuts, it'll be really gradual.
Yeah, they also said that they were like they backtracked like crazy. They backtracked last week. They went from 50 to 25 to 50.
Yeah, well, and I think the unemployment numbers is the reason why they kept the 50 basis points. But
yeah,
because you can't argue that maybe these measures have slowed down the economy too fast.
Yeah, yes, and that there's going to be more bad news coming along. So how they can project, they've been wrong. They went way too low, way too fast. They went way too high, way too fast. And now, like, them trying to fix it the other way, I mean, based on all of the bad decisions they've made, I don't really trust their future forecast.
Okay. So Rod, so to break away from that and going back to the current environment that took effect as of yesterday,
yes,
how does one go about comparing through you guys what they had pre-approved in months prior to what is current today?
So if you have pre-approvals, you should be updating them because the 30-year amortization takes effect today. So they're going to go from 25 to 30. They will get approved for more money. Okay, that's the first thing. And like I said, if they are pre-approved for something over $1 million, you may want to talk to them about the option of insuring the deal, and they can go to 30-year amortization, and they can decrease their down payment if they want. There is a cost to that, but if they want, the option's there. So
what's the cost?
The insurance premium.
The insurance premium.
Yeah. So if they don't want to do the 20%, if they were struggling to get to that 20% with closing costs, they can do 10%, 15%, whatever they want.
Okay. And talking about pre-approvals once again, I noticed that with different mortgage brokerages, the process is slightly different. How is it different at your brokerage?
So it's my opinion that pre-approvals are not real. They don't really exist. It's more of a pre-qualification. All right. So I know me personally, when I work with my realtors, I have I work very, very closely with them. And we'll get the income documents up front, and we will tell you exactly, on a case-by-case basis, specific to the home that they're buying, what they qualify for. But don't just go in and put an offer on a house for someone because they're pre-approved for 800. How many times, you don't know how many times that I've had this situation where they were pre-approved with someone else and they went and bought, and then they've come to me, and then all of a sudden there's either a problem with the purchase property, either it's as is something and there's a problem that the banks don't want to lend on it. There's UFI in there. It's one of those old condos that banks won't lend on. There's a million reasons as to why the more deal could fall apart. Maybe the property taxes for some reason are 3 times what they put in the system. They're 8,500 instead of 4,000, and that'll bump out the qualification numbers. So you have to always requalify them right up to the time that they purchase that property, because it's property specific.
I don't even know how that even happened these days. Like, how do people get property taxes wrong? It's
It happens. Yeah, I know.
Seriously, like people are actually putting in the wrong taxes.
Well, what may have happened is someone may have pre-approved them and just estimated $2,500 in property taxes, and then pre-approved them for $1 million purchase in Durham region. And we know in Durham region, $1 million house is not $2,500. It's more like $5,000. Right. So that's enough money to bump your ratios out.
So has the credit landscape changed significantly in the last little while from your perspective? Are you finding that people are finding it more difficult qualifying with the heaven forbid that people are skipping out on some of their mortgage payments?
Yes. So defaults are up 100%. I don't mean by 100%. I mean they are definitely up. Banks are being more diligent on paperwork, and that there is a lot of fraud that's happening out there. So they are being more diligent. And because they know there's certain income they're not allowing, and they're just being more diligent on the paperwork. That's really all it is. They're looking at your year to dates. If it's not matching what you're supposed to be making, they're asking more questions. So yes, the credit landscape is definitely tightened.
So related to what you just said, I came from the Brampton market, so I was in ground zero for a lot of this fraud. But from what I saw from my chair out west was that these documents were so prevalent that it actually affected on the closing date on whether or not it was the difference between the lender saying, yes, here's the money to the lawyer, or no, we're not giving you anything.
100%. Yeah. That's why we do so many private mortgages, because those deals fall apart and then they come to us for private money, right? Because they can't close.
Right. So the private mortgages have never really been affected by all of these rule changes. Is that correct?
No, not really. No.
Not at all, right? Is that why people come to you guys for the private? Because the rules are too stringent?
Yeah, yes. Yep.
Is it predominantly just these insured mortgage rules that seem to prevent people from, their dream of owning real estate, or is it something more?
You know what it is? It's just honestly, it's a lot of the pre-constructions that they bought, with a pre-approval, those pre-approval letters for that we did 5 years ago for those useless pre-approval letters at 1.5% rates, and now we're at 6 or 5, right? So they don't qualify. Almost none of our purchasers that bought pre-constructions qualify, and the values are coming in way under value. So they all of a sudden have to come up with more money. So that's why they're turning to the private mortgage market, because we're able to.
But I heard there are banks that will honor the original agreement of purchase and sale and pre-approve or approve mortgages based upon that document.
So it's very rare. There are some. I've heard RBC is probably the only one.
That's the one that comes to the top of my head.
Yeah, that's the only one I've heard or seen, and it's only project specific. Okay. And
I didn't know that.
And there's reasons why, right? They probably back-ended paid for the project, right? So it's in their best interest to close as many units as possible so people start paying the mortgages, right?
Oh, I never thought it from that perspective, but they don't tell you that up front.
No, of course not. No. There's a reason why they're taking additional risk, right? It's because they're trying to mitigate the risk at the back end, right?
Good
So,
Lord.
Yeah. Yes.
So yeah, going back to these insured mortgages, and I used to have a chart, a spreadsheet, where I
Yeah.
could sort of, as a realtor,
Yeah.
predict how much my client was going to pay out on closing,
Yes.
right?
Yep.
Has that changed much as a result of this these new rules?
I don't think so. I mean, we do the same thing. So that's part of when you're dealing with Michael and Amy at our offices there, that's something we offer as well, especially with selling and buying. We do a very, very, very specific spreadsheet that will tell you exactly how much proceeds you'll have from your sale and how much you'll have for the purchase, including like everything down to the land transfer tax, legal fees, everything, realtor fees, HST, everything. So we have those spreadsheets as well, and no, they haven't really changed.
So that 30-year amortization that didn't exist on the previous spreadsheets, that's going to have to be added in.
Yes.
And here's what I also noticed. I actually wrote this spreadsheet back in the late 2000s, and I hadn't even looked at it for over a decade. And when I had the old numbers of the old insured rates versus what it is today, it's doubled over that time period.
The premiums?
Yeah.
Probably. Yeah.
I was shocked.
Yeah.
When you don't look at something for a while and you kind of forget, maybe it was a gradual increase over the decade, but not looking at something in 10 years, I was shocked as to how much more the insurance is now than it was 10, 12, 13 years ago.
Yep. They're going to make a killing off this new rules because, like I said, a $1.5 million purchase, it's about $60,000.
Yeah, and that's the other thing. I didn't put $1.5 million purchase for first-time home buyers in that like spreadsheet because they didn't qualify, right?
Yep.
So now I got to add those price points in order for me to even roughly guesstimate what they're going to owe on that insurance policy.
Yeah, I'll send you something that you can share with the team as well.
That would be great. I'm just trying to think of other fees. Let's talk about fees. There was a client that actually was a little distraught. They qualified for, I guess it was a private mortgage, and they had to pay some kind of upfront fee to the mortgage broker. When does that kick in? Why do those things occur?
Well, for private mortgages, there's lenders and brokerage fees, right? So, and there's usually, depending on the broker that you use, they may ask for an upfront fee, so that just to avoid shopping around and wasting time, especially when these deals typically, because of the environment that you're in, it's like, they get the application on Monday, they want to close on Friday, right? So
that tradition doesn't happen with bank mortgages, though, right?
No, we can. We're allowed to charge upfront with a bank mortgage. Yeah, we can do so. Yeah.
Okay, this was news to me. I was like, I don't know the mortgage industry at all.
We traditionally don't charge on those types of deals.
Right. Okay, but are there any other hidden fees that people should be aware of when trying to qualify?
No, not when trying to qualify. There's just like the one thing when it comes to the closing costs, the one thing that people always seem to forget is the HST on the insurance premium.
Okay?
They always forget that. And that could be, $1,500 to $3,000. Okay. So
right.
So
Ron and Charles, back to your question there for a second. You do also have to, especially with private mortgages, it's really important to look at getting out of that particular mortgage, because a lot of lenders and private lenders do have some crazy fees to get out of the private mortgage. So you have to be careful there into where that money's going to begin with.
So on that topic as well, is it true that if you buy an insurance policy through one lender, if you switch lenders, do you have to go through that whole rigmarole and get another insurance policy?
No. Go ahead, Michael.
No, go ahead. No, Ron, go ahead.
So no, once your mortgage is insured, and you switch lenders after 5 years, the insurance it goes with you.
It goes with you.
Yeah, as soon as you refinance, though, it's gone.
What does that mean?
So as soon as so let's say you buy a house, 1.2 million. In 3 years from now, the market goes bonkers, and that house is selling for 1.8, and you decide you want to pull some money out, and you refinance your house, and you pull 100,000 out. It's now a refinance. It's not insured anymore. So what that means in actuality is, I mean, you pay a slightly higher rate on your refinance. It's always about 20 to 50 basis points higher. So that's why when you see rates, like for example on TV or online, you'll see whatever that lowest rate is, that's the insured rate. So the idea is that, I'll give you a real life example. Like right now, the insured rate is like, let's say 4.49, whereas the uninsured rate is 4.79. So it's 30 basis points in there. So that 30 basis points, if you never pull money out of your mortgage and you just keep renewing it or switching it and you'll always get that insured rate. So if you save 30 beeps on your mortgage, let's say $1 million mortgage, and you save that, $30,000 a year, it works out, you pay for the premium, right? So that
So Rose has got a
3,000 a
question.
year.
Yeah, have you seen Rose's question? Is it normal that a mortgage with a private lender will review automatically? Is that something, or
That it'll renew automatically?
yeah, would it okay, so let me rephrase that. Is it normal that a mortgage with a private lender, so the first mortgage is with a private lender, will
Yep.
it review or renew automatically? I'm not sure, Rose, if that's the right word.
Okay, I will answer that question. That's actually a very good question. So like Michael said, when we do these private mortgages, the idea is that they're temporary. There needs to be an exit strategy. We don't do them for more than a year. So if it comes to the year in the end, and normally they'll contact you and they'll give you options. But if you're not, this has happened a lot in the last 3 years. And some lenders automatically renew if you don't pay it out. Then if you want to pay it out a month later, they're going to charge you penalties again. So you have to make sure that your mortgage broker is very diligent in the exit strategy so that they don't auto renew you. And usually the renewal is a good thing because you probably need it. If you need to renew it, you're hoping that they're willing to renew it. As for doing it automatically, if you don't pay it out and they're okay with the renewal, then they will do it automatically. Depends what's in the terms and conditions and the schedules of the mortgage, the small print. But there have been situations where they will not renew at all. And this has become a problem in the last couple of years because some of these properties are underwater, right? So they don't want to renew them. And now all of a sudden you're stuck trying to get let's say you bought for $1 million, you have an $800,000 first mortgage that's private. Now your house is only worth 900, and the bank and the private lender says, I want my money back. Now you can only borrow 720. So how are you going to pay them out? The 800. You need to come up with cash or hope that they will renew you.
It's weird that as real estate agents, we get so wrapped up on the approval. I guess we forget to review all the terms and conditions that are contained in that mortgage document and review that with the client to see if it's to their satisfaction. Maybe that's just miscommunication between, the mortgage professional and the agent. I don't know.
That's why it's also very smart to deal with full-time mortgage people, because there's been a lot of part-timers in our business, and unfortunately those people come and go, and they sign up that private mortgage and then they're out the door.
Amazing.
Yeah.
Okay. So Michael, you had mentioned last week that you were going to maintain some regular hours here at the Scarborough branch. Can you let everybody know that's watching this what those hours are?
Sure. I'll be in the office every day except Tuesdays. I'll be in Newmarket with Ron at our head office. But Monday, Wednesday, Thursday, Friday, I will be here from about 10 a.m. till 4 or 5 p.m. Just regular office. So yes.
Fantastic. So guys, if you're in the branch and you see Michael, please come in and say hello. And I think more so now than anything, I think, and this is the biggest problem with real estate agents. We take things for granted. We just assume everything is always there at any given time. But and then when there are changes like this, we often don't pay attention, which is why I try to do these webinars as often as possible so that my agents are the most informed agents in the industry. And I really wanted to make sure that you guys were a part of this, especially with the introduction. Ron, I see that someone just joined you there.
Yes, that's Amy. She's
Oh,
going
that's
to be at
Amy.
the Brooklyn office. Yes.
I barely recognize you with glasses.
Yeah, I'm wearing my glasses today, trying to look smart.
So you're broadcasting from your Newmarket location, is that right?
Yes.
Awesome. Okay. So Amy, have you made it to the Brooklyn branch yet, or?
I just once, yeah, and I'll probably be there more often coming January.
Okay. Fantastic. Okay. Any other questions from the 5 or so people that are on this? I think everybody knows that I'm recording this. I'm going to be sending this out. So that's why and there's also an Ontario Real Estate Association webinar going on right now, which is probably why we have lower attendance. But how often would you guys like to do this? Would you like to do this on a monthly basis, or what do you feel?
I think a monthly basis would be great. Yeah. Yes.
Yeah. Okay,
Yep.
great. And there's a million mortgage topics out there, honestly. Like we could probably just hang out and talk shop for hours. But I guess we should just break it down for the agents so that they're in and out here in like 45 minutes.
Yep. Sounds good. Sounds good.
All right. So no other questions, guys. We're gonna end this at 11:07. If you have let's talk about your contact information.
Okay, so it's Ron at the gmt.ca. Okay.
Right.
647-894-6657. Michael.
Michael at smartdecision.ca. And phone number is 416-821-8660.
Great. And Amy?
It's Amy, AIMEE, at thegmt.ca.
GMT.
Contact number, yeah. Contact number is 647-531-3589.
3589. And I'm going to add you to my contact list. All right.
Perfect.
Thank you, guys. And I look forward to seeing you either in the branches or on the next call.
Sounds good. Thank you. Thank you.
Take care, everyone.
Take care. Take
Bye
care.
now.